and welcome to Interview with the Experts. Today, as usual, I'm joined by Alex Morrison, a senior broker here at Banc de Boundry's Limassol office. Alex, welcome.
Thank you for having me again.
Last week, we talked about fundamental analysis.
We did indeed.
The economic indicators you use to execute profitable and timely trades for your clients, your Banc de Boundary clients. This week, I'd like to talk about trading strategies.
Very good subject.
Do you have some favourites of your own?
Straddle, by far. Trend reversal, of course, and the knock-on effect are three of the most used, let's say, technical tools in binary options trading.
Right. Would you like to talk us through the straddle,
Definitely.
perhaps?
Actually, I was planning to show you something that happened today upon a report on the euro. We already know that we're checking our reports. 4 o'clock in the morning, New York time. Of course, we had the German IFO business climate. As usual, as I was showing last week, we know the previous report, we know the forecast, and of course, we're waiting for the actual. The actual hits, so let's just open the euro, USD. Perfect. I'm going to make a print screen of what was happening at that particular moment in time when the report hit. We can clearly see the report hitting 1100 hours on the GMT time chart. So, of course, we're opening a trade. In that particular report, the euro was obviously positively influenced, so we knew that we would be having a slight uptrend on the euro against the United States dollar. So what do? We wait patiently for the report. It comes out, so of course, I can clearly see my movement on the euro dollar being influenced by the report. Once again, we're going for 10-15 minute expiry times. Let's not forget that binary options as a definition is high return short-term investments. That's why we can afford to take into consideration reports in order for us to make profits with binary options trading. So of course, 10 minutes down the line, we can clearly see it on the chart. It would be at this particular moment in time. So what do? I am making of course, a trade for my Euro USD to go up. And this is exactly the straddle and the trend reversal. I'm looking at my RSI indicator, my relative straight index, and I know that I'm expecting a certain reversal on that particular one. So that is your trend reversal. Using your relative straight index, we already know that the market tends to correct itself at a certain level, and that's exactly what it did here. When it did that, of course, it created the opportunity for us to make a straddle. Now, my initial option was on a call option on the Euro US dollar. It hit its high point at 81 RSI. Of course, we open a position in the opposite direction with a put on the same exact expiry time. The expiry meets, and I capitalize on my profit on a put trade and on a call trade.
Both?
Of course. Exactly. So we enter a trade for the same exact expiry time, ideally 10-15 minutes down the line, at the lowest point before the report happens, and at the highest point after the report happens, same expiry time upon the trend reversal. Checking your RSI. Straddle complete. You used your trend reversal to actually complete your straddle. Result in 10 minutes down the line, you just doubled your profits in 2 simple trades.
2 winning trades.
Very, very easy to apply. Of course, it's not all the time that you can apply the straddle, but over 80% of the time on the reports, if the market is affected, no doubt about it, there's always room for a straddle. The only thing you need is to follow the market and understand when to go in on the trend reversal. And using your trend reversal analysis, then why not? Everything is possible. So the straddles is a very, very used, let's say, trading strategy in binary options trading.
Fascinating.
And I was mentioning the knock-on effect as well, which I wanted to show it to you also. So let's just go. I already have a graph open here. I have a overlay chart on my gold, of course, and what else? My US dollar. What happened? My US dollar index. What do we know since 97 till 2012? We already know that the US dollar is finding itself in inverse correlation with the gold. I mentioned that before in one of our prior interviews. So this is a simple and perfect example how I'm going to make profit on the US dollar. Obviously to go up based on that particular report that came out, and of course gold being in inverse correlation with it. Exactly at the same time, exactly at the same expiry time, we will definitely finish both in the money if the market is being affected in a high manner, let's say. You can clearly see it, my US dollar index, we enter a position, 10 minutes down the line, we're definitely finishing in the money. Exactly at the same time that I'm opening my trade for the US dollar, I'm having a trade as a put on the gold, same exact expiry time, Why did this happen? Because they find themselves in inverse correlation, strictly knock-on effect. US dollar got strong, gold got weak, and it's a simple example. Again, you double your profits using that as well. So by using these three simple trading strategies, you can definitely double or triple your profits on a daily basis as long as you trade events.
And you tend to use these every day now?
Every single day, with every single report, I always look for straddle, trend reversal, and knock-on effect.
Alex, thank you very much.
Thank you.
This has been Interview with the Experts with Alex Morrison. Join us next week when Alex will talk us through hedging binary options.